Good morning, good afternoon, good night. Welcome back to another schema scalper video. Today we're going to be looking at positioning ourselves in a position before the move takes off. So sorry, phone call. So how to position yourself before the move takes off, and how to understand a weekly range. So you've got daily range and you've got weekly ranges. So daily range is this, like where the highs and lows are most likely to form. So it's during these sessions. And weekly range, we look at many different factors, but for this week in particular, I was looking at this large range Monday, and I know it's not super large in terms of pips, but it's large in terms of only downward movement. So it's 110 pips, just downward movement. So there wasn't a real big up movement at all. So that's a large range Monday, and that usually creates the high or low of the week. So in this instance, I was expecting this to create the high of the week because of the seasonal tendency that we are in. Go back to, I think it was the 7-hour trade or something like that video. 7-hour trade in GBP, and you can see what I'm saying. This was a seasonal tendency that we want to be seeing lower prices in GU until the middle of next month. Right, so with that being said, I expected this to be the high of the week. It gets run out on Wednesday, so I'm expecting this now. Since it's run out on Wednesday, I'm expecting this to be the low of the week. So we've got Friday trading left, so that immediately leaves us with a range. I'm expecting it to take out the low of Thursday and stay within the range of Monday. So we've got this range to work with in terms of tomorrow's trading as targets. Okay, getting back to what I was saying. I'll leave this on the chart also for tomorrow. I'm not sure what the market's going to do. I haven't checked the economic calendar. There's a bunch of things I haven't checked yet, but it's a good idea of where the low of the day could form tomorrow. Okay. Back to what I was saying. How to position yourself before the move takes place. So this is gonna be a bit more complex in the way that we are looking at a weekly profile and then the daily profile. So where these highs and lows form during this time of day, we are blending it now with day of the week to catch the high low of the week. So what I was saying here about the Monday, that I thought after Monday close, I thought this was gonna be the high of the week. Now it gets taken out during Wednesday's trading. And in Wednesday's trading, you'll see the high of the day coming in at the London close. Now that in itself means something. Let's actually extend that over to end of London close. That in itself means something, right? Because usually we'll create one range extreme from Monday, Tuesday, Wednesday, and then the second range extreme from Wednesday, Thursday, Friday. So maybe this, if I was expecting this to be the high of the week, I was expecting Wednesday to trade a bit higher up, not take out this high, and then continue lower, and then Thursday to break Monday and Tuesday's lows for that market profile. That was what I was expecting for this week. But that didn't play out, as you can see. It happens. but now we get this beautiful setup here. So it's already taken that Tuesday, the Monday high of the week. So I'm expecting this to be the high of the week or close to the high of the week. I'm not expecting another move up, just because of the seasonal tendency, and we are at week open. Yeah, we are super close to week open, so I'm expecting a move down now, to move away from week open in direction of the seasonal tendency. And how I looked at that was, first and foremost, I know that now this is Wednesday, Monday, Tuesday, Wednesday's trading. Wednesday will create, or between those 3 days, it will create one end of the range extreme. Yeah, I think both is already made. Honestly, I think both is already made. Monday creating the low of the week, and Wednesday the potential high of the week, potential low of the week. And in Thursday's trading, we could have taken advantage of this. It's all good during hindsight. This low to this high. And you can see I've already the levels that I've marked here. That's all day open, day open, day open, day open. And this is from, let me close this. This is from 4 p.m. to 8 p.m., 8 p.m. to midnight, and then day open. 4 p.m. to 8 p.m., 8 p.m. to midnight, day open, so forth. So now I'm using this range from 4 p.m. to 8 p.m. Highest high. Actually, make sure that's actually on the highest high. Highest high and lowest low. Let me make sure. Yep. Now we're looking at these levels again. Just gonna draw that all through the day, because the range for the day is done. I'm doing it wrong. This one is erased. This one is erased. Changing this from flout to central bank dealers range or Asian range expansion. Boom. Three. Okay, now all of our work on the 15-minute chart is done. We're gonna head into a 5-minute chart. Back to the time we're looking at. So now it hits this level. We're above day open, so we're only looking at 4 cells, right? Hits this level. Is there a swing point? No, so ignore it. Goes through. Hits this level. Is there a swing point? Yes. Is there a fair value gap? No. No. The next one, where the fair value gap is made is much lower. It's gonna be tough one. Okay, where that fair value gap is made is too low, and it's already come back to this level, so I would ignore that. In terms of this range from 2 to 1, now this is gonna be kind of like, oh, you're cherry picking, but there are ways to find better fair value gaps, and we'll go into that in the next video. So 2 is already used up, we're ignoring that. It doesn't need 3 in the time. Okay, now we're going into the next time, which is the New York session 7 a.m. to 9 a.m. We're looking at the 3 level. These two have been used up. That's how I look at it during the day, guys. These two levels have been used up. And now this 3 level is left. So it hits the 3 level, comes back, creates a fair value gap. So there's a swing point, fair value gap. And now we're waiting for return to fill that fair value gap. We don't get it during this session. So what do? We extend the box over. So this is our area of selling. Extend the box over. Boom. And you see it comes back in. Hits that level, creates a swing point. Now there's a new fair value gap. Right? But it filled the old one at the open of the session. So at 10 a.m. it filled the old one. So you would be a buyer with a strategy right there. Your stop would be the high over here. Actually no, it's this high. The high over here, the highest high before price hit the fair value gap, plus 3 points. So that would be plus 3 pips, sorry. So that would be 9.4. You'd go into a bit of drawdown. You hit the 3 level again. And you're going down. You hit the 3 level, create the fair value gap. It is all on the 5-minute chart. Create the fair value gap, come back into the fair value gap where those two overlap. And now you could move your stop. You could enter another short position inside here where those two overlap. So right there. Stop 3 points above this high. So that would be, what's it, 12.6. Now the target for this one, since this is off the New York session, you're just looking for to cross day open and one level, or just day open, you could say, okay. And then the next one, since this is you're buying or you're selling the high of the day, you're looking for, just come on, see that, looking for a large expansion next day of that same level. And now you're setting your targets with the next day's projections. So that fair value gap that's made on the 5-minute, you bring that over, and you see during London it hits that fair value gap above day open and then continues lower. It hits the fair value gap and then goes into a second one, so you could enter off that second fair value gap. Stop 3 points above this high. So now your stop 3 points above that high, and the target would be below the day's lows, and then whichever level whichever expansion area you're using. So now you'll go back into a 15-minute. You look at it, okay, central bank dealers range consolidating, London, sorry, Asian range is also consolidating, and there's more movement in Asian range. So I will use Asian range personally. Now you'd mark up every level. So is that the potential low of day? Most likely not, because we haven't reached yesterday's day open and the lows of yesterday. So this one, let's just say your target is yesterday's low of day, 1 to 2 and 1 to 3, and then you're entering another position in London. So you have London, swing, I'm not on the 5 minute, that's why. Creating a swing high inside that fair value gap and a new fair value gap. So that would be the entry. Stop is 3 points above the high, 7.1. Oops, sorry, keep saying points. 7.1, 7.2. And now for projections. Since we understand that the seasonal tendency is for price to go lower during this time of year, we are looking for it to take day lows, right? So we're looking at 3, 4, 5, 6, 7 onwards, which is, I think it goes to 6, -6, -7. See that? Yeah. So once it hits this point, he hits it. This one range expansion down. It doesn't clear yesterday's day open. It doesn't clear yesterday's low of day. With the idea that we're going lower due to seasonal tendencies, and that Wednesday is now creating the high of the week. Okay, and then we're looking at two expansions down. No, it doesn't need it in our time, first and foremost, and secondly, it's still above day open and the low of day. 3, so now again for targets we're using the same thing we're using as entries. It's gonna be swing point and fair value gap. So does it stop at 3 and then create a swing point? No. So we continue on to 4. First of all, is it below previous day's low and open? Yes. So it's a candidate. Secondly, is it in the time we're expecting a reversal? Or yeah, is it in the time we're expecting a reversal? So it's yes, it is in that time, and it's below day open of yesterday. So that's potential target, but doesn't create a swing point. So now 5. Does it create swing point? Yes, but quite deep in. And does it create a fair value gap after the swing point? Yes. So right there, after the close of this candle, we'd close our position out because it's in the time, it hit the level, and it's creating a fair value gap. So right there, 1 to 7R, understanding that Wednesday was going to be a most likely high of the week situation. Seasonal tendency is for pound dollar to go down. We're buying above day open, and we're taking profits below previous day's low, and in these, and waiting for reactions at these levels, telling us that price is now wanting to reverse. Oh yeah, we've got this. And now also, if you've got the right level set on your chart for the previous days, you'll see a lot of times previous days lows, well, the previous days projections like this area here, these projections will overlap with the day you're looking at trading, that low and high of the day. Either or, sometimes both, but it will often overlap. So you see this three level overlaps with the low of the day. So that's why you need to have the previous days projections on, the correct projections, and you'd have the correct projections after price closes. So that's the easiest way to see, like, in catching perfect low or highs of the days. If you have previous days projections, you understand seasonal tendencies, weekly profiles, daily range profiles, and turning points, basically. With that being said, I hope you guys found this video insightful. Leave a like, comment. If you're new here, please do subscribe. We're going to be doing this as much as we can, as often as we can, until the wheels fall off. Cheers.